Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight in corporate filings. And sometimes it seems like a company is trying to hide something, or at least make it really complicated to understand what is going on. Today we're diving into Banzai International Inc.'s latest report, and let me tell you, it's a bit of a wild ride. We've got some interesting financial maneuvers happening and some significant changes to how business will be conducted. Stick around to figure out what it all means for investors and the company's future. And before we go any further, if you like getting straightforward insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community where we discuss these filings and more. The link is in the description below. Let's get started. This is a current report from Banzai International Inc. filed with the Securities and Exchange Commission. The main event here happened around mid-December 2025. The really important date for the events discussed in this report is the 17th of December 2025, but the actions themselves took place a little before that. Banzai International Inc. is a Delaware incorporated company, and as you can see from their filings, they have Class A common stock. Another key part of their structure involves redeemable warrants. These warrants give holders the right to buy shares of their common stock at a specific price of $11.5. This is important because these kinds of financial instruments can impact how many shares are actually out there and what they're worth over time. Now let's get to the heart of what's happening. Banzai International Inc. entered into what they call an exchange agreement and a forbearance agreement. Think of it like this: they were in a bit of a bind with the lender and they made a deal to sort it out. The deal was with Agile Capital Funding LLC and Agile Lending LLC, who are acting as the lender or holder represented by a collateral agent. Basically, Banzai owed them money, and there were some issues that could have led to default. So what did Banzai do? They decided to exchange a bunch of their company stock shares, specifically 232,786 shares of their Class A common stock, to reduce their debt. This debt was in the form of a promissory note that originally had a principal amount of $4 million. As of the 11th of December 2025, the balance on this note was $1,495,375. by giving up shares worth $284,000 at $1.22. Per S-hair, they reduced this debt amount. On top of that, Banzai also signed a forbearance agreement. This is where the lender agreed not to take immediate action on certain defaults for a specific period. This forbearance period is a temporary pause, lasting until the 30th of March 2026, or until something else goes wrong that triggers a forbearance default. And here is where it gets interesting. As part of this deal to get the lender to basically hold off on taking action, Banzai had to pay a significant fee. This forbearance fee was $628,057.5. This fee wasn't paid in cash directly, but was added back to the principal amount of the note. So the original note balance of $1,495,375 plus this forbearance fee means the new total balance owed on the note is now $2,123,432.5. This is a big increase in the debt, driven by the fee for the temporary relief. The filing also mentions that if Banzai messes up during this forbearance period, the lender Agile can immediately start foreclosure proceedings on the collateral Banzai had given them security over. This means Banzai is really trying to avoid any further defaults. Beyond the debt and forbearance situation, there's another significant change related to the company's governance. The board of directors approved an amendment to Banzai's bylaws that will reduce the quorum requirements for shareholder meetings. Starting after their 2025 annual shareholder meeting, which is scheduled for the 15th of January 2026, a quorum will only require the presence of holders of 33.3% of the voting power. Previously, a higher percentage would have been needed. This makes it easier for decisions to be made at shareholder meetings even if fewer shareholders attend. The filing also lists the exhibits attached. These include the fourth amended and restated bylaws, the exchange agreement, and the forbearance agreement. These are the actual legal documents that contain all the nitty-gritty details of the deal. Now let's put all this together and see what it really means. The reduction in quorum requirements is a pretty standard move for companies that might struggle to get high shareholder participation. It ensures that meetings can happen and important votes can be cast without needing a huge turnout. While this might sound like a minor detail, it can actually speed up corporate decision making, which can be crucial in fast-moving industries. It can also make it easier for management to push through proposals if they have a strong minority of shareholder support. The exchange of stock for debt reduction is a common strategy. Banzai used its equity, its own stock, to chip away at its debt burden. This can be a good move if the company believes its stock is undervalued or if it urgently needs to improve its balance sheet. By reducing debt, They lower interest payments and decrease the risk of bankruptcy. However, it also means that the existing shareholders now own a smaller piece of the company, and the value of their shares is diluted. The fact that they valued the shares at $1.22 each is specific to this transaction. The forbearance agreement and the associated fee are the most concerning elements. Banzai was clearly in a position where they were close to defaulting on their loan obligations. The forbearance fee of over $600,000, which then increased their total debt by that amount, is a very high price to pay for a temporary reprieve. It signifies a critical financial situation. This fee effectively means Banzai is paying a premium to avoid immediate action, but the underlying problem of the debt remains and is now larger. The jump in the note balance to over $2.1 million is significant. This means Banzai faces a larger debt obligation in the near future. The terms of the forbearance agreement are also critical. If they breach any of the conditions during this period, Agile can move in quickly with foreclosure. The company is effectively buying time, but that time comes at a substantial cost and with continuing risk. Looking at the bigger picture, Banzai International Inc. seems to be navigating a period of financial stress. They are using their equity to manage debt and are paying a significant premium for breathing room. The reduced quorum requirement signals a focus on operational efficiency and potentially a need for quicker decision making. The key risk here is that these measures are temporary fixes. The fundamental issue of managing their debt and ensuring profitability remains. Investors should watch closely to see if Banzai can use this extra time to truly turn things around, secure new revenue streams, or find a more sustainable long-term solution for their debt rather than just kicking the can down the road. The increased debt burden and the high cost of forbearance put them in a more precarious position moving forward. A clear opportunity will be if they can leverage the forbearance period to achieve significant operational improvements or secure new, more favorable financing before the March deadline. Alright, that is our breakdown of Banzai International Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Do you think these moves are smart financial management or a sign of deeper trouble? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description below to join the conversation. Thanks for watching. See you next time.